All right. Good evening. Welcome to Keeping Money Local, a Southern Illinois seminar series. My name is Byron Fager from the Southern Illinois Community Foundation. I'll be your host tonight. We want to take a moment to recognize our organizers, the Southern Illinois Community Foundation, Carbondale Spring, Cristados and the Southern Illinois Collaborative Kitchen, the Climate Economy Education, Egyptian Electric Cooperative Association, and the City of Harrisburg. Special thanks to financial support from Carbondale Spring and Egyptian Electric Cooperative Association, as well as in-kind donations from shopcarbondale.com web services. So I think we're going to hear real quickly from Carbondale Spring and Sonia Kruger.
Hello, and thank you for being with us this evening. My name is Sonia Kruger, and I represent Carbondale Spring People's Movement. Our mission is to create the solutions to meet the basic needs of every person in town. 2 years ago, we came together to develop a system of mutual support. After a year of research and weekly meetings, 4 programs were organized. These programs include food autonomy, solar renewable energy development, cooperative small business ownership, and care worker response. In 2020 alone, the Food Autonomy Board coordinated 3 summer gardens, 2 fall gardens, and provided the labor, funds, and resources for them. The community gardens provided specialized training, led to the construction of 15 chicken coops, door-to-door produce deliveries, free meal programs, educational outdoor workshops, and the cultivation of a new food forest led to plant and tree giveaway programs. To learn more about the cumulative impact of Carbondale Springs' mission, visit us at our website, carbondalespring.org. Hello.
Hello. Well, thank you, Sonia. So let's set up a few parameters for this evening. As many of you know, this is our 4th in this series, and so we are going to do it the same way as we have done the others. So in the interest of making sure that we have time to get through all the presentations, we're going to wait for questions to the end. So please put your questions into the chat windows or the Q&A, and we will work through them at the end of the session. So tonight, our first speaker is Michael Schumann. Michael is an economist, attorney, author, and entrepreneur, and a leading visionary on community economics. He is one of the world's leading voices in creating stronger, more resilient places and communities. His books include The Local Economy Solution and Put Your Money Where Your Life Is. His latest workshop, in partnership with Australia's leading placemaking consultancy, Village Well, is entitled The New Local: Building Resilient and Regenerative Communities, Cities, Towns, and Main Streets in a Post-COVID and Climate Changed World. This workshop will be available soon, and Michael has posted a free introductory course on cleannetwork.com. So welcome, Michael.
Great. Thank you very much, Brian. And I'm going to put up my slides here. So 1 second. Great. All right. So I have decided to call this talk 12 hot prospects for local investment and 8 ways you can find them. And this talk builds on a previous talk that I did for you folks about 2 months ago, 3 months ago. I've kind of lost track. But that exists online if you folks want to watch it. Clearly, we are in an extremely difficult and challenging moment. It is a moment when literally millions of small businesses are in danger of collapse, and we have this unprecedented pandemic that we are facing up to, and yet it is extremely important that we figure out new ways, new tools for helping these businesses. And I believe that one of the things that we can do, one of the best things we can do, is to promote local investment, to move our money from Wall Street to Main Street. I have a course that's coming up soon. So Brian mentioned this one course that I'm teaching with Gilbert Roche-Custe in Australia, called The New Local. And then another course, which will be ready probably in about 2 or 3 weeks, on Local Investment 101. And it has 15 different modules, everything from What are the risks and returns of local investments? How do you evaluate them? How do you use self-directed IRAs and solo 401ks? What are the virtues and the challenges of going for, if you're a business, trying to raise money from accredited investors versus grassroots investors? And what are some of the state and local policies that you might viably nudge your politicians to pass in order to expedite local investment transitions? I'm hopeful that some of you might be interested in this course, and if you are, you just need to go to my website, michaelhschuman.com, and sign up for the newsletter, and you will hear about the course. Where I would like to start my comments this evening is to talk about what are the most promising kinds of local investments, and to really broaden your imagination about what constitutes local investment. One way of thinking about local investment is, how do we move our money from existing stocks and bonds that are traded on Wall Street into things that are more local? And to do that, I think most of us want to understand what is the return on Wall Street. And if you listen to a lot of the people out there who sort of hawk various kinds of, stock investing strategies, they make the claim that the average rate of return historically on the stock market has been 10, 12, 15%. And I'll just tell you, all of these numbers are made up. And in fact, if you go to the website of this guy, Robert Shiller, who's a professor at Yale, winner of the Nobel Prize in economics, he has the prices of the S&P every year going back to the very beginning. And if you, take into account inflation, dividends, the rate of return on the stock market is more like 7 or 8%, depending upon when you come in and out. But you have to remember, there's a bunch of footnotes around that. And those footnotes are things like, well, usually there's a transaction cost associated when you buy and sell securities. That could be 1% or so. And none of us are absolutely perfect with our timing. So that usually brings down our expected rate of return more like to about 5%. I begin with this because thinking about local investment as something that can match or beat 5% is a much more reasonable and achievable goal than trying to get to 10% or 15%. So I want to give you a dozen different ideas for local investment. So the first thing that we completely overlook is that when we invest in ourselves, we actually are localizing our investment. And there is no better way of investing in yourself than in reducing any credit card debt you have. In fact, millions of Americans have incredible credit card debt. They're typically paying 15 to 20% interest per year. If they have penalties, it's higher than that. And to put $1 in the stock market where you're going to get a 5% rate of return rather than pulling yourself out of credit card debt is nutty, because every dollar you pay off in your credit card debt is going to give you a 15 to 20% rate of return. And of course, what's good for the goose is good for the gander. And if it's good to get yourself out of credit card debt, it's good to invest in your kids and your family and your neighbors to get them out of credit card debt or student loan debt. A third investment option, which almost always pays better than Wall Street, is investing in your home. So moving from being a renter into a homeowner is going to pay you over your lifetime a significantly greater return than 5%. And this has, by the way, nothing to do with appreciation. It has to do with the tax benefits of taking the mortgage interest deduction on your taxes every year, and also the fact that at the end of owning your home, you get $250,000 of gain tax-free, whereas at the end of putting money, say, into your IRA or your 401k, you're taxed on it. So those differences really make home ownership an incredible bargain. And of course, if you have a home and a mortgage already, but you haven't paid it off, then in most instances, paying off your mortgage faster is going to generate a better return than Wall Street. And this usually, it puts money in your pocket. It also keeps money in your neighborhood once you become a full-fledged owner of your home. Another thing to think about is your bills. And here, I think it's important to introduce the concept of a wasting asset. So, with Wall Street or with a lot of other investments, you're assuming that you can have that security for many, many years, and you get a rate of return each year and reinvest it and so forth. With a wasting asset, you're never quite sure whether you're going to get your cash back from that. So if I put $1,000 into energy efficiency, it may or may not increase the value of my home by $1,000. So really, what I have to do to evaluate that investment is get a payback of that $1,000 over 10 years, say, or some number of years. I think 10 years is a good benchmark. And if you compare, what you need to get over 10 years in order to match the 5% you would get on Wall Street, it turns out to be about 16% per year. I'm going to come back to that slide in a moment. But 16% per year is something that's really easy to do. So, for example, if you put $1,000 in energy efficiency, could you get each year a reduction of $160 in your energy bill? I think generally that's no problem. I mean, many energy efficiency investments have paybacks of 20, 25, 30%. If you put $1,000 into a greenhouse, could you get $160 of fruits and vegetables every year? No problem. $1,000 into a bicycle, you could reduce your gas expenditures by $160 per year. If you put $1,000 into an espresso machine, you are able to avoid just one Starbucks coffee a week, you would be beating the 16% rate of return. If you put $1,000 into your own education, you could probably increase your salary by more than $160 per year. And this is why Warren Buffett says that education is truly the most important investment that you can make. So my point here is that there are many things that we can do in our expenditure universe to deliver a better rate of return than Wall Street. Now, suppose you've gotten to the place, you've paid off all your debts, you have your house free and clear, you've done all of the energy efficiency and growing of fruits and vegetables and other things to bring down your bills. Now you have money you can invest in other things. Should you then invest in Wall Street? And the truth is that there's lots of local investments around us that pay better than Wall Street. And we'll hear very shortly from Kristen Barker in Cincinnati, who's one of the great pioneers in cooperatives. But I have, seen many, many examples of co-ops that say want to build an additional store that are offering debt notes for more than 5% per year, and they're very reliable places to put your money. Your favorite local business, of course, is a good place to think about putting your money locally. Now, It has been hard, sometimes expensive and difficult for local businesses to raise money from grassroots investors because of obsolete securities laws. Nevertheless, there are some really good examples over the last 10, 20 years of things like the Quimper Mercantile in Port Townsend, Washington, where the community decided to build its own general store so they had a place to buy socks and underwear. And with that general store, they built it with local equity. So they basically sold stock shares like Girl Scout cookies and raised more than $500,000. And of course, what happens when people are owners of a store like this? It's where they're going to do shopping, because this is where they're going to get their dividends and other returns. And they're going to be great enthusiasts for the store and encourage others to do their shopping there. But the truth is that for most businesses, the securities laws were way too difficult and expensive to do something like this. Many of us advocated for changes in securities law, and this guy, President Obama, in 2012 signed something that many of us worked on called the Jobs Act. And the Jobs Act created a legal pathway for online investment crowdfunding. And basically, any business, as of up until 2 weeks ago, any business could raise as much as $1 million on one of 50 federally licensed portals, and any American could invest up to $2,200 per year, and more if you earn more than $100,000. 2 weeks ago, the Securities and Exchange Commission decided to up that ceiling from 1 million to 5 million. That is a huge game changer. But here are some statistics that are quite remarkable about what we know about investment crowdfunding in the 4 years it has been legalized. Close to 3,000 companies have raised almost $500 million. The average raise has been over $300,000. The average investment, a little bit over $700 per person. Among the most successful companies with crowdfunding have been companies led by women and people of color, precisely those people who are most excluded from the mainstream capital markets. Now, crowdfunding is not only for profits. Crowdfunding can also be used by nonprofits. Now, of course, a nonprofit can't sell shares of stock, but a nonprofit can raise capital for, say, buying a building or maybe other projects. So Bellwether Housing is a Seattle nonprofit that did a raise on WeFunder in order to build 750 new affordable homes. There has also been a growing shift in the crowdfunding universe from investment in businesses in the abstract to investment in real estate. And I think this is an expression of a sense of risk. People worry that if they put their money into a business, they could lose everything. If they put their money into real estate, chances are good it may gain or lose a little bit of value, but it's not quite so risky. And if you're interested in some real estate projects or interested in taking a local real estate project and putting it on a crowdfunding site, one site you might look at is called Small Change, which specializes in mission-oriented real estate. Number 10 is your city. So for several years, there was a website called Neighborly, which applied the tools of crowdfunding to municipal bonds, which is kind of a cool idea. So, if you say we're living in Atlanta and there was someone wanted to build a zoo, but the city didn't feel quite confident enough that the zoo would be popular with everyone in the city, so they didn't want to just raise taxes around it. So the city of Atlanta would issue zoo bonds that other people living in Atlanta who are really committed to the zoo could invest in. Now, Neighborly doesn't exist anymore, long story, but I think other websites will come in. And in the meantime, you could work with your city to help them issue municipal bonds that were purchasable by people in your community. Number 11 is grassroots investment funds. So there are something like 10,000 funds in the United States, mostly pension funds or insurance funds or mutual funds, and 99.9% of them invest in Wall Street stocks and bonds. But there's probably 20 funds that invest in local business and other community projects in which grassroots investors can participate. And I recently did a study called Community Investment Funds, a how-to guide for building local wealth, equity, and justice. You can download that online for free if you're interested. And it talks about a new generation of funds that is focused on things like local food businesses, affordable housing, businesses run by African Americans in low-income tracts of Boston. Really exciting new frameworks for funds that I think might inspire you. Finally, if you can't find any other place to put your money, you might think about putting it in local banks or credit unions. And here's the reason. The probability of $1 put on deposit in a local bank going into a local business is 3 times greater than the probability of that same dollar going, say, on deposit at Bank of America winding up in a local business. You're not going to get a great rate of return, but it's doing some good in your community. Now, the next question is, where can you find these investments? And I'm going to give you 8 answers to this question that hopefully you can apply immediately if you're interested in doing some local investment. So the first place is thinking about yourself. Assess your own needs and dreams. Are you in debt? Are you a renter? Do you need more energy efficiency? Do your neighbors, your kids, etc.? Number 2, investigate your family's needs and dreams. And I'll give you one example of this, which is I had the misfortune of being divorced 12 years ago. It put me in terrible debt, and what I did to get myself out of it is I crowdfunded for the debt locally. And I found friends, family, supporters. I promised them a rate of return of 5%, and it got me out of debt. And it was one of the smartest decisions I ever made. And it was a kind of local investment. And I created that investment opportunity for the people around me. And by the way, it's all paid back now, so we're good to go in the future. Number 3, find other evangelizers. Who in your community is a great supporter of local businesses? So this is a woman that I work with in Baltimore named Stephanie Geller. I'm going to tell you more about her in a minute. But Stephanie has made it her business to know everyone in the small business community in Baltimore. So who's running the courses? Who runs the SBA programs? Who is running the incubators and the maker spaces? And by knowing those people, she has gotten a sense of who are the greatest, latest local businesses out there. And she is able to start identifying those businesses that might be ripe for some kind of investment deal. Number 4 is finding fellow travelers. So there are other people all over the country, thousands of them, who are interested in local investment. Many of them have become members of networks like Slow Money. I'm about to launch a project that I'm calling the Main Street Journal, where I'm going to identify people who want to be local investment organizers all over the country. And if you're willing to do that for your country, for your particular community, I hope you identify yourself as well, because I want to make it easy for people to find their fellow travelers. A good example of how this has happened is in Washington State, where the state, and I underscore state, has actually invested in creating networks in communities across the state that are with folks who want to engage in local investment. And as you can see, several of the investment networks are raising, hundreds of thousands of dollars to millions of dollars. So this is serious business. Number 5, check the crowdfunding site. So as I mentioned, there are 50 federally licensed crowdfunding sites right now. If you go to this site, investibule.co, and you press on the link of your state, you can immediately get a list of all of the crowdfunding issues, say, associated with Illinois, and then you can start to vet them more narrowly. And over time, as the number of issues on the crowdfunding sites is growing, they're going to permit you to be able to identify not just state but zip code as a way of getting deeper into what is truly local to you. Number 6, unleash a lion. So LION stands for Local Investment Opportunity Network, and it was started by this guy, James Fraser, in Port Townsend, Washington. Again, my favorite small town in Washington State. It was started about 12 years ago. And basically what LION is a monthly party, a monthly gathering, where they bring together local businesses and local investors, and they develop relationships with one another. And one of the things that we forget is that local investment at the end of the day is really all about relationships. And just this one act of a 10,000 person town creating this venue for relationship building once a month has generated nearly $1 million per year in local investing between 2008 to the present. Number 7, you might think about making a public list of all the businesses that are involved in crowdfunding. So I mentioned a few minutes ago Stephanie Geller. She and I started something called the Maryland Neighborhood Exchange. And really all it is, it's basically a very crude and ugly website because we didn't have any money, but a crude and ugly website where we list all of the companies in Baltimore that are on the crowdfunding sites nationally. And we're helping to inform and mobilize Baltimore investors to go to those crowdfunding issues. And we believe we've played a hand in mobilizing, just over the last year, about $200,000 of investment in 20 very small businesses in Baltimore, mostly run by African-American entrepreneurs. Number 8, if you really want to be ambitious, take your fellow travelers, take the people you have a relationship with, and form an investment club. So the SEC allows you to create your own LLC. You can have realistically up to maybe 20 members. Everyone puts in money. Everyone has to be involved in all the decisions. You don't need unanimity, but it's a nice way of getting involved in local investment. Turns out that for the moment, local investment requires some work. It requires work to find local investments. It requires work to evaluate them. It requires some work in order to manage them year in, year out. But if you have a group of people you're doing this with, you'll have better information, and it'll be a lot more fun. The last thing I just want to say again is that if you're interested in going into any of these things in more depth, you can either email me at schuman@igc.org, or you can go to my website, michaelhschuman.com, And there you can just sign up for the newsletter and I'll let you know what's happening with the workshops. So I am going to stop there and hand it over to my esteemed colleagues.
All right, thank you, Michael.
And
All right. Okay, so our next speaker, hold on a second. Our next speaker is Kristen Barker. She is the executive director at the Co-op Cincinnati, or Co-op Cincy, where the mission is to create an economy that works for all, that supports family-sustaining jobs, provides business ownership opportunities for underserved and historically marginalized people, and is accountable to the communities that drive it. She is a social entrepreneur and president and co-founder of the Cincinnati Union Co-op Initiative, CUCI, and is co-founder of One Worker, One Vote. She designs and leads participatory education events with English and Spanish-speaking co-op workers and helps worker owners make their businesses more successful. Kristen has done groundbreaking work in adopting the Mondragon model to the U.S. context and hosts delegations from around the country, including participants in our semi-annual Union Co-op Symposium. Welcome, Kristen.
Thank you. I am happy to be here, and I really enjoyed your presentation, Michael, so thank you for that. So here in Cincinnati, what our goal is, which sounds really similar to the video we heard at the beginning, I think by Sonia, is we're really interested at Co-op Cincy about how do we create an economy that works for all, especially those who have been historically excluded. And so what we do is we're about creating a network of worker-owned cooperatives, worker and community-owned cooperatives. We are based on the Mondragon model, which I imagine some of you have heard of, but just in short, it's this lovely, it's an incredible proven model that actually moves the needle on things like inequality and long-term poverty. I'm going to mention that in a moment. Well, I'll tell you it now, I guess. But what's incredible, Mondragon is in the Basque region of Spain, and it was an area that was super devastated after the Spanish Civil War. The levels of poverty and unemployment were through the roof. And what happened over the course, beginning in the 50s, an integrated network of worker-owned co-ops got started. There's a lovely story around that, but just big picture for now. Within about 30 years, they had really gotten to a place of nearly full employment, where poverty was the levels of poverty were basically non-existent. And I got to be there about 2 years ago. And when I was there 2 years ago, Spain had an unemployment rate of 20%, but this area of Mondragon was at 4.1%. So super resilient. At this point, over 75,000 people work in this community of co-ops that is over 100 strong. So they made a historic partnership in 2009 with the steelworkers to launch something called Union Co-ops in Cincinnati. We were the first group in the country to bring that to life, and now happily there are others. But what we do at Co-op Cincy basically is we do co-op, we help launch co-ops, so we help do startups. Then we work with existing companies and exiting owners who want to transition their company to their workers. We also do cooperative education and culture building. So every week we're meeting with our various co-ops, supporting them, because most of the folks that haven't had much training related to businesses, often in the beginning when they start working, financials are really intimidating. But we use a process called the Great Game of Business to demystify things, to make it fun, and so forth. We also have a loan fund, and that's what I'm going to especially be talking to you about tonight. At this moment, we have 9 cooperatives and more in the works. So I'd be happy to talk about that later, any of the ones that interest you. we got started, just so you know, we incorporated in 2011. We launched our first cooperative, which is Our Harvest. I'll mention that briefly because it seems to relate to your food autonomy efforts. Our Harvest is about creating access to healthy local food in a way that honors land and labor. So it's a farm and food hub that provides over 100,000 pounds of food to people in the greater Cincinnati area. And then I guess the other one I'll mention is Sustainergy, which was the next co-op. That's a residential insulation co-op that does mold remediation and is moving into solar and is connecting with, I believe his name is Brent, who may be on this call, maybe. But anyway, I mention that because there's a lovely Carbondale connection at this point where hopefully some really joint support can be happening. He's coming to Cincinnati to get a closer look at Sustainergy and share what he knows. We'll share about our network and all of those kinds of things. But as you can see, we got a lot of different things going on, from childcare to composting to home care, another food access effort or multiple food access. We actually, Michael mentioned real estate investment, and we have a real estate investment co-op called Dividend Housing, which is connected to a cool way of doing affordable housing called renting partnerships. So that's part of our network as well. But tonight, the main focus is our loan fund. So if you have questions about who we are and what we do, I'm super happy to tell you. But right now, I'm going to move into our loan fund. And happily, we're a part of this national financial cooperative called the Seed Commons. When Co-op Cincy first got started, we kind of looked towards the example of Mondragon, and we noticed how important their bank was that they created to making things happen. And we wondered, how do you go about doing that? And looked into it, and a loan fund and all the regulations. That was pretty serious business, pretty tough. I like the way Michael was sort of saying, look at all these other options. But we always did want to have a loan fund. And what's been really remarkable is that we've been able to be a peer member of the Seed Commons, which is a community development financial institution. It's using the infrastructure of a group called the Working World, and it's just awesome. So at the moment, I'll tell you a lot more about this, but it allows us to have the loan fund we dreamed of, but the larger cooperative takes care of the various regulations and things that we need, and gives us the opportunity to use a lovely system for a lovely online system to do our due diligence on loans, to continue to work. So it's pretty nice. More on that. So what is the Seed Commons? Again, it's this national network of locally rooted funds that use non-extractive capital. I'll talk about that in a moment too, but it is about, the whole goal of all of this is, how do we broaden ownership? How do we do that for people who have been especially historically excluded, that don't have as easy access to capital? And the idea is, if you can create a vehicle, because Michael talked about, it's really difficult to fund small businesses, especially startups. They're extremely risky, and when people are looking for places to put their capital, they often want to kind of find a place to put maybe a little bit more of it somewhere than is the optimal amount perhaps for a particular place. And so one of the ideas of the Seed Commons is, how can we kind of create the infrastructure to take on big investments and get those channeled and funneled to the key small businesses, small cooperatives on the ground throughout the United States that can really be transformative. So let's kind of create this infrastructure, this plumbing system, and let's kind of just funnel it, channel it, get it to where it can be the most impactful. So at this point, the Seed Commons has actually 30 loan funds. I'm not sure if this is the most up-to-date picture. You can see us there in the middle. we're a full member. There's different stages of membership because the Seed Commons wants to be supportive and help people learn the skills necessary to be a project officer along the way, and to kind of get your feet wet in different ways. So there's different stages, but we're a full member, and I'm on the board of the Seed Commons at this point. And these are the principles that are the Seed Common principles, and our loan fund, our local loan fund, just adopted them. But it's about building cooperative, democratic ownership within communities. It's about productive sustainability. That means that we really want to be thoughtful where we are putting money. We want to, these aren't grants, these are loans that we want to be super thoughtful so that this money can continue to circulate for more and more time. So we really want to take a look at that and make sure that we're being thoughtful. We also want to take risk, but we want to take thoughtful risk. We want to maximize community benefit. We want to be radically inclusive. And we believe in this principle of non-extraction, which I mentioned before. And what this means, and this is incredible money, like I wish that when we had started our Harvest Cooperative back in 2012, we had access to this. Because what it means, and hold on one second here, I'm going to read you this and then I'm going to explain it. So it means the repayment of loans comes only from an increase in revenues or profit stemming from the investment. So it's not extracted from prior existing business assets, nor the personal assets of those who make up the enterprise. Collateral will be restricted to items purchased with financing from the Seed Commons. So it's really different than walking into a bank. I mean, just a quick story. When we started our harvest, well, that's a very capital intensive thing. And we took on a lot of debt. We took on way too much debt for us at terms that were from our credit union. But because investing in a small business is risky, even though we had people in our community members co-sign with us, we still had rates of 12.4% in terms of 3 years, which was really tough for a beginning business that was developing its market and kind of bringing back some farmland, bringing it back to life. So it was pretty tough. And what's extraordinary about this money from an investee, from a business point of view, from a cooperative business point of view, is that you actually don't pay back until you are profitable. So whether that is 3 months, whether that is a year, you are actually not paying. It is true interest is accruing, and interest in the Seed Commons is usually 8%, but it's simple interest. It's not compounding. And you get a pass if you are not successful. Now, how can anyone give you money like that? And the answer is that the way the Seed Commons is designed is to be able to put sort of risky money like that, make that work. It can only work when there are teams on the ground in the cities that can offer wraparound technical assistance. So the model is capital plus wraparound technical assistance. So in Cincinnati, for example, we meet with our co-ops every week. And are really supporting their goals, are helping to problem solve, are all sorts of kinds of things in order to help them be as successful as possible. And that's the kind of thing that all of our Seed Commons peers are doing. And that's what starts to de-risk this kind of money. When you have a group on the ground that has actually been working with you from day one, so they've been working to help change the odds of your success, by really taking the time to get a pretty solid business model out there and to test it in small ways and change it as needed and so forth. So we're kind of working with people to give people the best chance of success, but then we're continuing to work with them basically forever, I guess. But I mean, I think, more or less. So when you have that sort of support around you, it becomes easier to put money into that kind of a thing. So let's see. So in Cincy, since October 2018, I just should mention with the Seed Commons, you have the ability to have your own proprietary fund, and you also have the ability to tap into the greater Seed Commons money. So we have our own proprietary fund, which started at $50,000, but we've already, just that same money has already lent out $54,288 since October of 2018. And those loans have gone to a startup childcare co-op. It's gone to worker owner shares for our harvest and also to worker owner shares for a home care worker co-op that we have. And then we've also lent $171,400 from Seed Commons funds to Sustainergy, our harvest, and the Cincy Cleaning Co-op. So those were equipment loans for our harvest. It was actually a restructuring of our debt that I had mentioned before that has allowed our harvest to have incredible wings and do much better. And the Cincy Cleaning Co-op was a startup loan. So that's the amount of money that's out and about since October of 2018. Let's see. It doesn't like to change to the next slide, which is a shame. Oh, there it goes. Great. So the structure, just to have a sense, is that I kind of mentioned that wraparound technical assistance. And so each of our co-ops has a project officer. I work with 4 of the co-ops. Other staff members work with other co-ops. Project officers' jobs are to help the co-op in all kinds of ways, to help facilitate team meetings, to support problem solving as issues arise. When doing the loan, it's the project officer fills out this loan memo on this awesome infrastructure, this digital infrastructure called Madeline. And let's see. So the project officer is the one that represents the co-op at the Sustainability Committee, which is the group that makes a decision about the loan. And the project officer is like the main point person for the co-op, the wraparound technical assistance person for that co-op. The Sustainability Committee is we have one both locally in Cincinnati, and then the Seed Commons itself has a Sustainability Committee that I'm on. Any full member of the Seed Commons is a part of that. But what the job is there is, well, locally we meet monthly to review loans and review progress and see if anything kind of needs to be done. And then at the Seed Commons nationally, we meet every 2 weeks to review loans from all of the various loan funds that are out there. So the Seed Commons right now has about $11 million out and about in the world with a really exciting pipeline. So I'm looking forward to the questions. I wanted to kind of go through this relatively quickly so that we would have time for questions and I could kind of go deeper into wherever people have the most interest. But there is one thing, I forgot to mention. I told you about that. We have about $225,000 that has been loaned through Co-op Cincy. But we announced in September a multi-million-dollar business legacy fund. This is a fund where existing businesses who are interested in business owners who are interested in exiting their business or actually just having their owners have a stake in the business but continuing on, could tap into the Seed Commons money for a transition. So people applied. We had an application date, which was this past Sunday, and we've had 10 businesses apply for that. Really interesting mix of companies. So that's going to be pretty exciting to work with in the next period of time. So I'm particularly interested in your questions, but I think I'll go ahead and I'll stop for now, and it'll be Chuck's turn, and then I can't wait for the questions. That's always my favorite part.
All right, thank you, Kristen. And our third speaker tonight is Chuck Paprocki. Charles Paprocki has spent many years working with troubled teenagers, prison inmates, welfare recipients, migrant workers in the human services system. He also owned a graphics and advertising agency in New York City, where he combined his skill and knowledge to create social marketing campaigns. He is one of the core leaders to create the universal pre-K program in New York State and the local food movement in Illinois. His latest work was to manage an organic farm in Southern Illinois. He has consulted with international NGOs, management strategies, and participated in the Earth Summit in Brazil and the Social Summit in Denmark. He is now retired and living in Carbondale, Illinois, and is a volunteer with the Carbondale Spring Food Autonomy Project. Welcome, Chuck.
Thank you, Byron. Good evening. We've heard from Sonia previously that when a group of people in Carbondale came together 2 years ago under the title of Carbondale Spring, we spent a year going to weekly meetings to develop a common vision of how to create a town we all wanted to live in. We spent 2020 in putting these 4 projects on the ground: food autonomy, renewable energy, a team of care workers to respond to non-emergency 911 calls, and the creation of an ecosystem building for cooperatives, and the beginning of the Southern Illinois Cooperative Business Fund. We realized early on in our deliberations that we wanted to build a local economy that linked small businesses into a network that would reinforce our goal of meeting people's basic needs. By basic needs, we mean food, shelter, clothing, healthcare, and education. To develop this network would require us to create many businesses and provide startup capital to get them off the ground. We focused our research on workers' cooperatives as a means to accomplish our goal because they are based on principles of economic democracy, while lowering the risks and barriers of entry-level businesses. As such, we began to work on 2 vehicles to accomplish this: a revolving loan fund to make loans to startups, and 2, a co-op of co-ops to offer services to the startups like legal and administrative help. In this process, we engaged with the Climate Economy Education and the Southern Illinois Community Foundation about becoming partners in this venture. We also reached out to national experts to help us. They have been a godsend in answering a myriad of questions and by providing us with models to guide us towards our goal. Many of the speakers who you have heard in the previous seminars, as well as Michael and Kristen, who are this evening's speakers, have helped us tremendously and continue to do so. It was a great surprise for us to learn in our outreach efforts that there is, in fact, a national community of people who are working to help local people build local economies. Instead of waiting helplessly for chain stores and multinational corporations to come in and control our lives while draining capital from the local economy. It was in this outreach, therefore, that we became aware of Seed Commons, a remarkable organization composed of local revolving loan funds that helps new members get off the ground with training and capital to make loans. At this point, The Southern Illinois Cooperative Business Fund has worked through the initial steps of securing a not-for-profit status, developing a board of directors, creating loan policies, testing the market for potential loan applicants, and conducting outreach in Southern Illinois for investors and partners. We are also in discussions with Seed Commons to become an apprentice member in their national cooperative. Presently, we are in the process of hiring our first staff member. We are helping to train and fund our first workers cooperative, which is Cristado's Restaurant in Carbondale. We are also putting together a campaign to allow local people to invest their savings in their own local community. The seminar series is a part of this effort. Before I end my presentation, I want to briefly discuss the loan policies of our business fund. Because it is our main goal to meet local people's basic needs, our loan policies prioritize this goal rather than private profit solutions. As such, our policies differ considerably from typical business loans. Let us take a brief look at what I mean. Byram, could you put that slide back up? Thank you. In the next 3 slides, you will see that in our evaluation of loan applicants, we value social capital as well as finance capital. These forms of social capital we call structural capital, relational capital, and cognitive capital. The next 3 slides indicate how the business fund will evaluate these forms of capital. In this first slide, we show an example of methods we will use to evaluate an applicant's finance and structural capital. You will notice that our method of evaluating finance capital does not mention collateral. This is because we will not collateralize personal property or even business property that has not been purchased by the loan that has been applied for. To create a successful cooperative that is dedicated to the community's well-being is more valuable to us than taking property if they cannot pay a loan payment. Structural capital has to do with the ability of the applicant to meet the community's basic needs. Does it play a role in creating a local economy that is self-reliant? What are its current contacts? Are its suppliers local? And does it produce for a local market? Next slide, please. This next slide deals with the question of relational capital. By this, we mean the applicant's current personal involvement and contributions to the community. We want to know if they are committed to making Carbondale a successful community that is built upon personal relationships and trust. Next slide. By cognitive capital, we mean the applicant's values. Do they value the community and demonstrate their commitment to it? Are they willing to make a long-term commitment to its success? Because our loans require a commitment to community, we will set limits on the amounts and conditions of repayments to ensure that financing is never harmful to the applicant. Our goal is for capital to simply be a tool for people to use to develop a community of mutual support. Here, capital is subordinate to the needs of the people. This is the method to ensure that finance capital is put in the service of economic democracy and economic decentralization. The latter is a core concept in the goals of both conventional and cooperative economic development, to create an economy that lowers a region's risk associated with dependence on only a few major employers. Next slide, please, Byron. This next slide shows the guarantees that the Cooperative Business Fund will make to loan applicants if they are willing to share our commitment to creating a successful socioeconomy for Carbondale and the greater region. Next slide, please. This final slide presents the basic formulas that we will use in making our loans. The cost of capital for the applicant will be less than the profit from their investment. The cost of capital will be less than 50% of investment profits. Finally, the depreciation will be less than the cost of capital, which will be less than 50% of investment profits. Although unorthodox by contemporary business practices, we know that this system will work because Seed Commons has demonstrated an 85% success rate in getting new businesses off the ground and running using this method.
I didn't realize this would come.
Thank you for your kind attention. I hope you have learned something tonight about our vision for creating a community of trust and mutual support for the people and environment of Carbondale. We value these more than personal profit, and we have sought out a means to build a local economy based upon them. If these ideas resonate with you, we encourage you to work with us or share your resources with us in whatever way that makes sense to you to help us build this brave new world. If you have personal savings that you are looking to invest, please do not give it to Wall Street. Rather, invest it in yourself or in your local community. You are helping the people that are your neighbors and who directly contribute to the quality of your family's life. You will be creating a social security for yourself that no corporation or government agency will ever be able to take away from you. All the best and good night.
So Quimper Mercantile.
Byron?
All right, thank you, Chuck. Appreciate that. So now we will enter the Q&A session portion of this. We are looking here quickly through the chat window and seeing what we have. Nice testimonial from Brooke talking about how she has started to invest in her hometown by purchasing a building. Kristen, do you find more success working with startups or conversions?
I think that's a great question. Startups are often really difficult. There's so many different challenges. Conversions have an existing business model, but they actually have a ton of challenges too. So I don't think there's a silver bullet of ease. I think there's valuable work in both spaces. I'm really excited to see what happens this time around. We've met with over 20 different businesses who have considered this in the past 2 years. And interestingly, a transition to becoming a cooperative or an exit, but there's been a whole variety of external situations that have prevented those from moving forward. So a conversion isn't necessarily super simple. I'm really interested to see at this moment though, because the 10 that applied, some of them are pretty pretty serious about moving forward and look like they, from what we have see so far, they seem like it really could work in a relatively timely fashion. Startups. One of the things we do in Cincinnati is offer something called Co-op U, which is a 12-week co-op boot camp where we have groups of people who have an idea, who want to create a co-op go through. And so we do 4 or 5 at a time. And then we keep on working with them. I think, I don't know what to say exactly. I would say none of it is super easy. All of it is fun and challenging. And then the next question about, so Seed Commons is a CDFI. In terms of non-extractive lenders, there are some amazing CDFIs out there. Shared Capital is another one in the cooperative space. And Cincinnati Development Fund has been really important in multiple projects for us. And while they don't call it non-extractive capital, they offer really remarkable rates, especially when it comes to real estate. So our real estate investment co-op is very much benefiting from their participation in renting partnerships. Also for our grocery store, that same one has been able to bring new market tax credits to the picture for us. So another amazing group is called Self-Help Credit Union. They work with people around the country. They're a credit union and I guess a CDFI, so they have a little bit more wiggle room on rates. And then there's all kinds of neat examples like Michael was talking about that aren't, like you're asking for traditional or more conventional. That's why I'm sticking with those sorts of groups. But there's all kinds of non-traditional interesting things going on besides what we've talked about tonight. And the next question, Michael, okay. I think you should take that. And I want to know the answer.
Let's see. This is the one on legislation.
Considering businesses that have recently closed and people who have lost their jobs, what is the short-term and the low-term, long-term, low-hanging fruit activities that we can pursue in this economy? And it's also talking about the fact that it's, you know, we mentioned as I was giving your introduction that your book is talking about a post-COVID world, and yet the COVID world continues to go on now. So we don't know when we're even going to get to that post-COVID world, but how, you know, what's your, you know, impact or your outlook on that now?
Yeah. So there was a slide that I skated over very quickly for time, but it was a picture of my favorite local business person, Andy Shalal, who runs a network of businesses in Washington, D.C. called Busboys and Poets. And Busboys is a combination restaurant, bar, bookstore, event center, and it's really it's a terrific third place. And when COVID hit, my partner and I decided, you know what, we had to adopt at least one business and help it. So we just went to Andy and we figured out, you know, in a typical year, we maybe spend $1,000 there on dinner. So we wrote him a check for $1,000 and said, please, you know, give us credit for these meals in advance and use this to help with your cash flow. He was so pleased, he gave us $1,200 in gift cards. So we got a 20% rate of return on our investment. I raise this because, you know, obviously none of us can save one business. We can do just our small part. But imagine, you know, imagine multiplying that act by 1,000-fold in your community. Imagine creating a website where you list all of these local businesses, all these local restaurants that are struggling right now, and you invite people to do pre-purchasing. And pre-purchasing, unlike most loans and most equity, in most instances is not a security. So the pre-purchasing activity can be done much more quickly than a lot of the things we were talking about. There's a proprietor out there called Protegra, which is in Manitoba. they have a website called Local Futures, where they help communities list these businesses pretty easily. And I don't know takers yet who have used it, but I think trying to do something for restaurants and other retailers quickly in your community is a great first step. And one of the neat things that can happen is those people who are willing to do the pre-purchase, in a way, have identified themselves as, yeah, they're the most promising local investors in your community. So if you want to take the next steps of, well, let's introduce those people to businesses that want loans, want equity, are starting co-ops, I mean, this is a natural step.
Mhm. Yeah, I'm so happy you answered that. I love your answer. And what I would say is, I think what was getting hard for me was just the low hanging fruit part, because I was just, that seems perfect. Pre-purchasing seems like a great one. I was thinking, yeah, that seems like a great answer.
I mean, there's lots of things that we could do that are, higher hanging fruit.
That's where I have a lot of ideas.
Yeah.
But that's
Yeah.
where, yeah.
And I love in Canada, there's some really wonderful models. I mean, in Canada, they allow communities to create investment co-ops.
Yeah.
So, take what Kristen has done and multiply it by 100, and that's what's possible under Canadian law. In Nova Scotia, they have community-based pension funds, and they give you tax credits if you put money into those funds. In the province of New Brunswick, they have tax credits for every local investment. So every dollar you put into a local investment, you get 50 cents off your taxes. And the state of Michigan is now entertaining a bill to do the same thing with Michigan income tax. So these are things that take time, but when you think about it, man, these are the things that are game changers, that don't just move money at the edges, but really would get, a ton of people involved.
So that thing about Michigan is like a really nice segue into Richard's question. Do you see that one?
Yes. Hi, Richard. And yeah, about Congress. What will Congress do? So, as I mentioned very quickly in my talk, 2 weeks ago, the SEC passed a boatload of reforms on crowdfunding. Many of them are quite technical and I'm not going to bore you with them, but almost all of them do good things in facilitating local investment and ease the rules around the issuance of securities and make it easier for grassroots to participate. And all of that is terrific. So I think as people study those things, I think they will see a lot of acts to come out of it. The problem with this is that our securities law structure is not one, but really 4 or 5 different laws, depending on how you think about it. So we have one law around the issuance of securities. We have one law around the trading of securities, that's the Exchanges Act, and one law around the pooling of securities, that's the Investment Company Act. And even though we've had all of these reforms around the issuance of securities, we've had nothing on exchanges and nothing on funds. I think what we're going to see in the next couple of years is some initiatives to change the law around funds. I have a colleague out there, Brian Becken, who works for Cutting Edge Capital, and he's written a really nice proposed rule change for the SEC to make it, to basically allow local in-state funds to have an easier time to be formed and to do more community development work and allow unaccredited investors to participate. So really the stuff that both Chuck and Kristen were talking about could be done easier, much more broadly and faster under these proposed new exemptions. I think there's a shot at getting that passed. And it doesn't necessarily require legislation, and that's one of the things that we Washingtonians try to pay attention to. If there's a regulatory pathway that gets you there faster, I mean, and avoiding all the mishigas in Congress, do it.
That's exciting about Michigan, the one you mentioned.
Yeah, it is exciting. I don't know. I mean, I have a conversation with one of the people who helped to push it next week, so I'll know more about its status. But here's another thing to think about, which is in many states, localities and counties have their parallel taxes. So, maybe it's property tax or a sales tax or their own mini part of income tax. You could just do, in certain states, you could do your own tweak and create your own tax credits locally to facilitate local investment. So, yeah, I mean, great if a state can do it, but if you can figure out a way to do this locally, take the initiative now.
Interesting. That's cool.
All right. Let's see, do we have anyone else have any questions out there?
I do notice that we didn't fully answer Amy's. I didn't see the second one. But I definitely think
Also,
that the low. Oh, did someone else speak for a second there? Oh,
go
maybe
ahead.
not. Okay, but where she was just talking about how can local cooperative investment lower the kind of risk for everyone, that is, I mean, enormously true that's how cooperative investment works. When COVID hit, we had all these cooperatives that you just saw in our original picture. And so they were all impacted in different ways. And it was really remarkable. And I should just mention, actually, even an example before COVID, but just during a challenging time, I indicated that our harvest had too much debt. Well, we were in an intense period where we needed to restructure our debt in order to move forward. Our customers, our harvest customers, became community owners to help. They actually just wanted to donate. They wanted to do what Michael said, pre-purchase. They wanted to do all sorts of things. And they were like, we can't lose this. And meanwhile, the co-op workers were incredible at trying to think through, well, how can we figure this out? Can we receive less money for a period of time while we get through this hard moment? Can we, so it's just this cooperative democratic community control has so much power and possibilities for weathering crises. And even our co-op network, all the co-ops are connected. So two of our other co-ops work to try to help our harvest for a period of time. Our harvest had previously helped them with something, given them work. It's very powerful. So I'm a big believer.
And can I add something here too, which is, in putting together this handbook on community investment funds, I talked with a lot of fund managers. And one of the trickiest things is that, particularly when funds are small and working with communities where there's not a lot of wealth, you have to really bring in a fair amount of technical assistance to make the whole thing work. And for a lot of existing funds, the way that they do this is they find foundation partners or philanthropists or I don't know, maybe like in the New Hampshire Community Loan Fund, they try to match each investment dollar with a philanthropic dollar that takes care of the technical assistance. What's really nice about the cooperative model that Kristen talks about is that almost naturally you have a network of businesses and mentors and supporters that can bring on that technical assistance without necessarily carrying a price tag. And I think that is that is a real comparative advantage that the co-op fund model brings.
Well, I'm just going to pipe in with a question if that's okay. So, I mean, this is just kind of out in left field maybe, but so a lot of the things we're talking about, you know, it's about improving, you know, the state of the community and people's jobs and things like that. I mean, how does something like a universal basic income or something like that factor into some of these models, or does it?
Well, I mean, I think, you know, if you, I don't want to put words in Kristen's mouth, but certainly the Mondragon model, it guarantees both an income and a job. Guarantee is probably too strong a word, but that, you know, it accomplishes much of the same thing, but in a different way. And I think that there's a certain virtue to that. But also, you know, and I think you can also say that creating a network of local businesses working together in a more collaborative way could accomplish that. I mean, there is a wonderful network of local businesses in Switzerland called the WEIR, or WEIR if you're a Germophile. And the WEIR has been, it's like a mutual credit network. They have a currency. They offer technical assistance to one another. We have nothing really like that. I mean, we have a you know, a national federation of independent businesses, which is like as right-wing as Attila the Hun, and, you know, does nothing creative in this realm. So it's going to take some work for us to, you know, figure out how to build these local business networks that are doing some of these kinds of things creatively. But in the meantime, I think the cooperative networks provide great lessons for us.
Something I would also say, Amy, based on your previous thing, is like sort of like what industries right now are sort of hot, I guess, or maybe easier to enter in terms of, say, startups or so forth. And I would say like things that are related to healthcare, home healthcare, also our childcare co-op. Right now, childcare with COVID is at a really significant. It's just having, you know, there's so many issues and challenges, and we use this model where we're working to pay living wages to the caregivers, and so it's about creating these little shares or pods. But that might be something that would be interesting to folks there. Those are some that are like, in terms of when that question came up about what's easier, a startup or a converting a business, it's like each one is so individual, but some businesses that are easier to start are those that are less capital intensive. Things like I'm talking about, they're also often more competitive, but here anyway, we have an unbelievable waiting list for home care. And so that might, like, it might be just paying attention to where those gaps exist, and those things are for sort of looking towards I guess the startup side of things. And the nice thing is when businesses, well, I don't know if you feel fully ready to do this at this point yet, but so putting a business through a transition is extremely rewarding, especially when you see that legacy continuing on. And this is a moment that's been really disruptive to many businesses. So some people are just tired. So there's just, I guess, and worried, and like a lot of opportunity to support those folks at this time.
All right. Well, thank you. Well, we are going to wrap things quickly, just at least for those that do have to leave us right at 7:30. We want to make sure we get a few thank yous in here. So thank you right now to our presenters, Michael and Kristen and Chuck tonight for your presentations. As you can see from the chat window, the information that you provided is very, very welcome, and it has sparked even more thoughts and questions that we will have. We want to give a special thanks to financial support from Carbondale Spring, Egyptian Electric Cooperative Association, and in-kind donations from shopcarbondale.com web services. And we would like to thank our organizers who helped put together this 4-part series, which is the Carbondale Spring, the Southern Illinois Community Foundation, Cristados, and the Southern Illinois Collaborative Kitchen, the Climate Economy Education Incorporated, Egyptian Electric Cooperative Association, and City of Harrisburg. So this is the last of our 4 webinars in the Keeping Money Local series for Southern Illinois. This is not the end of our work, however. We will be working to build our local carrying capacity, start and support new businesses, local businesses, and build new worker cooperatives and increasing local investment opportunities. You can always visit keepingmoneylocal.com or join any of the action groups that we have created at Climate Economy Action Network at cleannetwork.com. In the coming days, all of our participants and subscribers will be receiving an email that will have links to all of the videos from our webinars, and we will have a short survey to get your feedback so that we can get some ideas for how to keep the effort moving forward. So while we are officially wrapping this up, and I don't know that our speakers can stick around for long, what I had mentioned to Amy and Chuck and the others of the organizers is that were this a typical seminar series afterwards, we would be looking to find wine glasses or for other types of adult beverages and hanging out. This COVID has really put a hamper on all these things that we should be able to do where we could talk and converse with each other. So we want to hang around for a few minutes if anybody that can. No one is required to, but we are grateful for any feedback that anyone has on what we can do to keep this effort going and so on. But thank you all, and stay healthy.